Goldilocks is back. We are in a definite Goldilocks rally today. Tesla stock is headed straight up. What is going on? Well, hang in there for later on in the show when I get to the economy section, and I'll explain why interest rates are dropping right now after the jobs report shocked on the high side. And if Elon Musk has been blowing your mind as he has my mind for years and years and years, he's just getting started. Investors Business Daily has this. Nvidia CEO Jensen Huang told analysts on the earnings call that a new wave is rising in agentic AI systems. Wang highlighted AI chauffeurs like Tesla's FSD and Waymo. And he discussed the new AI frontier and put Tesla and Musk's xAI in his list of fastest growing companies in the world today that are pioneering agentic AI. Now, would you want anybody else to say that? Can you think of a single person who you'd rather have heaping on the praise on Elon Musk other than Jensen Huang? I don't think so. Although the president of the United States isn't bad, and he was heaping praise on him the night before. Meanwhile, CFO Colette Kress said that NVIDIA's year-over-year increase in automotive revenue was primarily driven by self-driving solutions. Kress noted that NVIDIA is partnering with Uber to scale the world's largest Level 4 ready autonomous fleet. Uber will be using the next NVIDIA Hyperion L4 robotaxi reference architecture. Well, it would be scaling the world's largest Level 4 ready autonomous fleet, except for Tesla, by far. I mean, how does she even say this? It's not even close. Investing.com. Piper Sandler, another relatively important company out there, hosted investors at the California Fremont factory, where participants test drove the newest release of Tesla's autonomous driving system. Oh, what an idea. Who's been suggesting for months that investors and pundits like Piper Sandler's Potter would be actually going out and driving the vehicles. Potter wrote that we think FSD is a truly impressive product that is probably already better than the driving skills of an average American. A conclusion strengthened by what he described as a flawless robotaxi ride to the hotel. The firm encouraged investors who have not yet done so to experience FSD version 14 firsthand, arguing that the technology continues to exceed expectations. FinViz says that the bulls, that would be the Tesla bulls, focus on the technical outlook first. The long-term trend line remains intact, indicating that the uptrend is still alive. Every time the stock has approached this level, meaning 400, I think, buyers have stepped in. It's a defensive pattern that suggests underlying conviction, you think? Especially after months of sideways trading, maybe even 5 years of sideways trading, up and down and up and down in between, but about where we were 5 years ago. Beyond the chart, the fundamental story is still compelling for long-term holders. The company's revenue is at an all-time high. It's showing signs of getting its groove back, and it's making good progress with its full self-driving technology and robotaxi initiatives. He doesn't even mention energy and the upcoming Tesla Semi. This week's analyst updates reflect that optimism. The teams at both Cowen and Stifel reiterated their buy ratings, with their latter boosting the price target to 506, as reported here on this channel. This is Randy Kirk. The reason you want to buy that book right up there on the shelf, the reason you want to buy AI Rising is because you are handicapped without it. That's it. If you don't have that book, if you aren't reading what's happening in the AI world at the fundamental level, the foundation level, and also at the daily, how the impact on your lives and your children's lives and your grandchildren's lives, you're handicapped. It's just as simple as that. I will promise you that this is the leading edge book that you can buy right now with leading edge information that nobody else, I'm promising you, nobody else is reporting. Buy the book, buy the book. Intro, that was the intro. Why am I reading intro? Walmart reported profits and sales. Are you ready for this? Walmart reported profits and sales that topped forecasts on Thursday as the world's largest retail continues to see growth in an uncertain consumer environment that has challenged some of its key rivals. It's not an uncertain consumer environment at all. The consumers are spending more. I haven't seen any numbers yet that suggest the consumers are not increasing their spending at about 6% rate. Oh, yeah. Well, there are challenges in terms of what? Oh, yeah. The big ticket items. That's where the problem is. And the big ticket items are being impacted by the Fed. We'll talk about that in a minute. The company reported earnings per share of 62 cents above the 60 that Wall Street was expecting. Revenue rose 6% to 179.5 billion. Multiply that times 4, you're getting close to, well, it says here, getting close to 800 billion a year. And that was above the number expected as well. Same store sales also topped expectations, up 4.5%. Against forecast for a 4% rise. The company reported a 1.8% rise in foot traffic, and a 2.7% rise in the average ticket. The company also raised its guidance for the fiscal year, saying now expects net sales to increase in the range of 4.8 to 5.1%. Yeah. Total non-farm payroll employment. Okay, here was the mind blower. There was so many mind blowers over the last 3 days, but this was the mind blower that's got everybody's attention this morning. But let's dig into the details and find out why bonds are dropping this morning in the face of total non-farm payroll employment edging up by 119,000 in September. But has shown little change since April if you average it out. The U.S. Bureau of Labor Statistics reported today the unemployment rate ticked up to 4.4%, but has changed little from September when it was 4.2. I'm sorry, changed little in September. Last month it was 4.3. I'd have to go back and look, but we've been in a range of 4.1 to 4.4 for a very long time. Employment continued its trend up in healthcare. Employment continued up in healthcare, food services, drinking places, and social assistance. Job losses occurred in transportation, no kidding, and warehousing. And of course, the federal government saw another 7,000 jobs lopped off. Both the unemployment rate at 4.4% and the number of unemployed people at 7.6 million was very little change in September compared to August. These measures are higher than a year earlier when the jobless rate was 4.1% and the number of unemployed people was 6.9 million. That's 6.9 to 7.6 today. Average hourly earnings. Got to dig into these numbers. You can't just take those headlines. Average hourly earnings for all employees on private non-farm payrolls rose by 9 cents or 0.2%. That would give you a 2.4 for the year. But if you go over the past 12 months, average hourly earnings have increased by 3.8%. Now, if earnings are going up at 3.8% and inflation is at 3, which isn't the case, but let's call it 3, that would still be outstanding. But inflation really is at about 2.6, 2.5 at the most. So this would be very, very good for the folks. In September, average hourly earnings of private sector production and non-supervisory employees rose by 8 cents or 0.3%, more in line with that year-over-year number. The change in total non-farm payroll employment for July was revised down by 7,000. Oh, really? So July was revised down by 7,000 to only 72,000, and the change for August was revised by 26,000 negatively. And so that went from a positive 22 to a negative 4. All right, so now you start looking at 72,000 negative 4 and positive 122, and what do you get? Oh, I didn't do the math, but that sounds to me like maybe 60,000 a month average. And what do you think will happen next month when they report? Oh, they'll revise down again. But let's just say that it's 70,000, 50,000, 40,000. That's in the range of what I've been saying all along. It indicates exactly what we would expect with so many people being sent back to their home countries. All right, how about this? And the week ended November 15th, the advanced figure for seasonally adjusted initial jobless claims was only 220,000, a decrease of 8,000 from the previous week's level. The 4-week moving average, this is the first week, by the way, that the federal government is back in the business of reporting this. The 4-week moving average was 224,000. Excellent, outstanding, exactly where it's been forever. I mean, for years. The advanced seasonally adjusted insured unemployment rate was 1.3%, exactly where it's been. The advanced number for seasonally adjusted insured employment during the weeks ending November 8th was 1,974,000, an increase of only 28,000. Now then, we get into the total number of continued weeks claimed for benefits in all programs this week was 1.786 million, an increase of 18,000. And this would be the issue that most people are paying some attention to, which is how easy is it to get a job once you've lost your job? And that's an important thing. All right, from Grok, I wanted to know, okay, well, what's going on with all of this information, which I just explained to you? What we're looking at is a continued softness in employment, but not terrible, kind of Goldilocks-ish, okay? So as of November 20th, according to Grok 2025, right now, some trackers show 74% probability of a 25 basis point cut. Oh, really? That went from 37% yesterday, and it's back up to 75% today. So they're looking at the numbers that I just went through with you, and they're reaching the conclusion that I just told you about. And it's not going to be the conclusion you're going to hear from CNBC and the others. This is the conclusion when you dig into the numbers and you see what's going on. Now, the stock market is also reacting correctly this morning to these numbers. The real EJ and Tony, I always have a problem with EJ because of AJ. The net job growth in September from full-time hiring and replacing part-time work with those full-time jobs. I'm sorry, let me read that again. The net job growth in September was from full-time hiring, replacing part-time work with full-time jobs. This is a welcome improvement after the weakness earlier this year. Also, we reported yesterday 100%, 2.8 million jobs or something, 2.3, I forget the exact number right now, are American citizens getting jobs and replacing non-citizens. Philadelphia Fed this morning says the diffusion index for current general activity increased 11 points to a negative 1.7 in November after a sharp decline in October. The share of responses indicating decreases narrowly exceeded the share indicating increases. So you got a little bit kind of balanced, but 31% versus 29%. 40% said no change. The new orders and shipments index both declined and turned negative. The new orders index fell 27%, its lowest reading since April. But the firms continued to report overall increases in employment, and the employment index ticked up by 1 point to 6.0. And in this month's special questions, the firm were asked to forecast the changes in price raises of their own products and of their own incoming costs. And their forecast was an expected increase of 3%, but that's down from 4.1% just a month ago. The firms also reported a medium increase of 3% in their own prices over the past year, down from 3.5% the last time they were asked. The firms expected their employee compensation costs on a per employee basis to rise 3.3%, down from 3.5% in August. And the firm's median forecast for the rate of inflation for U.S. consumers over the next year declined from 3.6 to 3.0. The diffusion index, now this is really good. The diffusion index for future general activity increased from 36.2 to 49%. This is the highest reading in a year. The future new orders index rose to 55.6, its highest reading since January. Future shipments index was unchanged, however, at 48.4. Both future price indexes remained elevated and moved higher. The future capital expenditures index ticked up also. We're expecting capital increase, people to spend more on capital goods, especially because of what happened with the big, beautiful bill. Important. This is from Benny Johnson. Important. U.S. HUD Secretary Scott Turner says the department is moving towards deregulating housing to crush shortages and to make homes affordable for young Americans. When you build a multifamily housing, 40% of the cost of that is regulation, and a single-family project, about 20 to 25% of the cost is regulations. So tearing down the regulatory environment from a federal standpoint and encouraging firmly that localities also take inventory of the regulatory environment, because that is really what is crippling development and building. So in other words, instead of these city mayors and these governors talking about subsidies and the government getting involved even more in building homes, just reduce the regulations and you'll get the housing. Okay, breaking this morning, speaking of housing, existing home sales rose 1.2% in October 2025. What? Month-over-month sales increased in the Midwest and South. No change in the Northeast, and fell in the West. Year-over-year sales rose in the Northeast also, Midwest and South, but decreased in the West. According to NAR, National Association of Realtors, Chief Economist Lawrence Yuen, home sales increased in October even with the government shutdown. But why? Taking advantage of lower mortgage rates. Listen to this now. Rents are decelerating, which will reduce inflation and encourage the Federal Reserve to continue cutting rates. This will help bring more home buyers back into the market, since the Fed rate has an indirect impact on mortgage rates, a very indirect impact indeed. In fact, we saw the last Fed cut, the short-term interest rates went down and the 10-year went up. Anyway, I don't think that'll continue. I believe if we get the cut in December, which now looks probable, that we will see the mortgage rates come down the full 25 basis points, in my opinion. All right, let's talk about the President of the United States approval rating. It blows my mind. This morning, Fox News is continuing to use the failed polling companies that just haven't gotten it right ever. I mean, in 3 presidential cycles, they haven't gotten it right. But the one who has gotten it right consistently is Rasmussen. They have Trump at 47% approval rating. Now, listen, here's more good news. Listen to this now. Truflation this morning, their overnight has dropped to 2.42. That's a big drop overnight. This is primarily because goods inflation dropped overnight from 2.8 all the way down to 2.45. You got core inflation continuing to drop day over day over day. We're just seeing core inflation drop. It is down to 2.16, according to Truflation. Now, services stayed around 2.7, and PCE went up a little bit to 2.37. All right, that's a lot of news. Almost 100% Goldilocks. You got to remember that a couple of days ago, we talked about the Empire State Fed report, which was also very positive. So manufacturing, which we have not been able to quite, people are saying, how come it hasn't come back? Well, it's coming back. It is coming back. Just watch for it. Okay, let's go ahead. Tesla this morning up 5.91, almost 6%. At this point, it went up straight to 5%. It came down a little bit, and now 5.91% at 427.88. Where will we end the day? I have no clue, because on a day like today, you just don't know how this huge pricing. At some point, somebody's going to say, I'm going to take some profits, and you might get a little bit of a pullback. All right, got the Dow up 1.5%. You got the NASDAQ up 2.39%. You've got the S&P up almost 2%, 1.82. So we're back now within about 2.5% of all-time highs on the S&P. You've got the Magnificent Seven 100% straight up, but like for instance, Nvidia's 4%. Tesla's up almost 6. You've got the rest of them are all, except for Google's up 4%, the rest of them around 1.5 to 2%. The VIX dropping dramatically out of the 20s back into the teens at 19.91. That's down 15% today as they get, I guess people are more relaxed now about where things are in the economy. You got the Cathie Woods, all except for PayPal. Why is PayPal down in this great market? Oh, that's because Block had crazy blowout earnings report yesterday, and Block is up 5.81%. The same as Tesla this morning, and the rest of the Cathie Woods are all up. 𝐼𝐸 up 6%. 𝐼𝐸𝐾 up 3.52. Yeah, the Cathie Woods are doing just fine this morning. Well, that's understandable when you come over here to the bonds, which are down 1.6% this morning to 411.5 or almost 412. Let's hope that we can see that continued back down towards the threes over the next few weeks. I don't think it'll make it by Thanksgiving, but maybe we'll get it around the time the Fed does their reporting. I think it's December 9th, but don't write that down. We've got oil edging up a little bit this morning, back up over 60 to $60.09. Natural gas up 0.15. I can't believe it's up at 456, but about where it's been hanging out for the last few days. You got gold at 450 up, but still 4,087. Silver continuing to do its flying higher and higher, almost $51 this morning, and copper down 0.04, about $5.02. You've got the dollar is perky. That's what the headline says this morning. As U.S. rate cuts bets fade. No, that's not the reason, because the U.S. rate cuts, these headlines, it's like my headlines. I mean, I put my headline out, right? You guys see my headlines, and then, an hour later, it's completely wrong. What are you going to do? All right. Bitcoin is up $1,100 this morning at 93.08. That's still real low for Bitcoin. Ethereum up even more, 2.12%, but under 3,000 still. Under 3,000. All right, that is all the reporting that there is to do right now. Let me tell you about today. Should be a normal day. We should no extra video in the middle of the day today, and barring breaking news, I shouldn't say never, could happen, but we'll have Bradford Ferguson probably around 4 o'clock, and then Cern Basher somewhere around 7 o'clock or so. So look forward to those two. Last night, fantastic videos, unbelievably good videos. I guess I should put up both, because we had Jeff Lutz and we had Brian Wang, both unbelievably important videos. If you didn't watch those, pick one. Maybe you don't only have time for one or the other. Which one should you choose? If I'm honest, probably the Brian Wang video. Just a little bit. It's close. Okay. Anyway, those cards will be right up there. What else is there to say? This is a Goldilocks day. It's an exciting day. Minds are being blown across all the categories of business right now. Everybody is excited. The Tesla, one last look, 5.91% up. That is pretty amazing. It has been great talking to you.